Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is July 21st, 2013 edition of Market Outlook. So, markets closing on new highs, foreign markets recovering, bonds sort of pausing on its uh, pretty meteoric rise in rates, and overall economic conditions seem to be overall tepid but improving on a mostly global scale. So let's take a look and see how the markets are responding. Also, don't forget to sign up for our service of Market Outlook. It's free. You can get the text version and this video update for free by going to the website, marketgauge.com, and signing up. Also, two services I want to point out. Mish's Market Minute Premium service, where we have a new addition, the portfolio, as well as the Market Advantage, which is a lightweight version where we're more focused on position trading as opposed to swing and mini swing trades. So be sure to go to the website, find that out if you're interested in finding out what we're doing on a real-time basis. So first of all, let's go to IWM. As you can see, on a weekly basis, we have basically broken out in here. You can see this section in here. We have clearly and decisively broken out of a serious sideways compression range, and it's moved up nicely just in the last 2 weeks, up from about 100 to 104. That's a 4% move in the last couple of weeks. Light summer volume overall, but still not excessively overbought. So this is overall an excellent sign for the markets as a whole. We like when the smaller cap stocks lead. They generally show sustained movement even in the larger cap stocks and market indices overall. Going down to the daily charts, you can see the daily chart itself also not overbought, worked off what we would consider an overbought reading on the RSIs to the upside. So it was more of a time-based correction, extremely positive. And again, you can see we're firmly in an uptrend. Accelerating 50-day move rate average to the upside, accelerating 200. Overall, that's looking good. I'd be extremely cautious, however, around that 102 level, which was that breakaway gap. That would be extremely important level to hold. Okay, let's go down and check out a couple of other indices here. Let's take a look at the spiders. Okay, on a monthly basis, you can say on a longer term basis, if we take out the lows, the intra-month lows put in June, that would be a critical level. You can see that this triple top here going all the way back to 2001 or 2000 was taken out over the last 4 weeks. We've closed above it convincingly. We are touching the upper end of the channel, still not quite overbought, so there's more room to the upside. You can see that even just touching the top of the channel, you're looking more like about a 172 level. So that's a good another 1 or 2% from here. If you exceed the top of the channel, we're looking at really around 177. So that's a pretty decent size rally to get up to this top of the channel up here. So overall, looking pretty good. Are we running a bit rich? Yeah, but on the RSI, still plenty more to go on the upside. And again, that cautionary level, this, if we took out that low, which I think is about 156 in the spiders, we would be extremely cautious. That whole top here, if we did take it out, could be a pretty interesting potential trap. Okay, let's go to some of the market internals here. McClellan Oscillator, interesting. We definitely got into an overbought area, dipped down on that one potential key reversal day, and have been working our way sideways, which has overall been the pattern up around these levels. Not that you can't get a substantial sell-off. This definitely was an early indicator, a couple weeks actually early before the thing actually started to sell off. But nonetheless, we have had a couple of overbought readings as the market has, continued this rise, and we got more of sideways action than actual strong sell-off. So what I would suggest here is watching this McClellan oscillator, which looks out, several weeks or more, to take out the recent spike low that was put in on that one key reversal day that now we're trading over and it's sort of been violated. However, from a market internal standpoint, I would really want to see this thing trade not only under that one key 150 level of this McClellan oscillator, but this point right here, which is about 120 on the McClellan. Meanwhile, on a shorter term basis, we are in a overbought or rich area, but again, unless both of these hook down and trade under these key levels here, which is 60 on the up down volume and 2000 on the advanced declines, the bull market or the bull indication on the shorter term market internals still intact. Let's go to gold, GLD. Gold, as you know, we've been playing this reversal pattern in here. It looks like to me that obviously this trade is panning out rather nicely. We've peeled off some of the position we still hold, looking for a potential bounce up to the 130 level where you're going to meet some really good resistance up here and this declining 50-day moving average as well. So, another potential $40 to $50 rally in cash bullion is in the cards here. On the other hand, a move beneath this key candle pattern here would mean a potential test maybe of the recent lows. So, you've got a volatile situation here, but meanwhile, the overall pattern, this reversal pattern, is still intact. Let's go to Germany. One of our recent calls acting very, very nicely. As you know, we were looking at country funds and saw the big divergence between U.S. equities and foreign equities. And the strongest one from 2 weeks ago was Germany as it went into a positive phase change to warning, right? Moving above the 200-day moving average while you're still under the 50 is a warning phase, and it was what I would call not a very strong warning phase because as you see the moving averages here, the 50-day was sort of flat. So we were pretty convinced that this improvement in market phase with Germany being the least hit of all the foreign equities was a good play. That's panned out. Running a little bit rich, 99 on the RSI. We've peeled off some profits. Obviously, we're going to have to eat through all this resistance, but we're now in a positive phase. Let's see if we can hold this 50-day moving average. We'll certainly be taking the last part of our position off if we fail under here. On the other hand, overall looking positive, but a bit overbought in the short term. But that was a nice, good 7 to 8% rally in this index, doing very nicely. Let's move to the TLTs. These are the 20-year bonds. As you can see in the bonds on the weekly chart, we were looking at a potential bounce off the 200 weekly moving average, with it also being a little bit oversold here in the early part of June. Continued to get more oversold, and then the market just sort of has been languishing but bouncing off of this 200-week moving average, which we think could possibly get first cut to this rapidly declining 50-day moving average. So the channel here, we've sort of broken out of this declining channel. The key number to hold is the the low on Thursday. Otherwise, testing of the lows is in gear here. If we can break those lows, which are, let's see here, right around the 107.50, you can see it would be taking out and returning back to this channel line here. So a violation of Thursday's lows would probably mean that we're going to be testing the recent lows and the TLTs, and rates are moving up. In the interim, we have broken out of this descending channel, but of course the bigger picture is that we have topped out. We have put in the lows in interest rates, the highs in prices. Potentially, you can see we've got some pretty serious resistance at the 115 level if you look at the weekly chart, and that coincides with this line right here. So first level of resistance around 112.50, and then additional resistance around the 115 area. Okay, so that pretty much wraps up this week. You can see the overall picture of the markets, right? Interest rate rise, stalling or abating, potential little bit of a rally here in bonds, but you got some serious resistance overhead. Overall, equity markets look in play. You got the bigger picture key reversal point on the June lows, and market is in gear otherwise. Thanks. Hope you're having a great summer. See you next week, and bye for now.